Okay, everybody, it is me, Gregory Mannarino. It is Tuesday, September 28, 2021. Here we go. Let's talk, people. Lots of stuff going on. Let's start off with this. Just a couple of things I want to bring to your attention. Today, at 11 a.m. Pacific Standard Time, I will be on with Lynette Zhang. I know a lot of you love that lady. She's great, and I'm looking forward to being on that show today. Thursday, for those of you who are asking, I will be on with Alex Jones, noon Pacific Standard Time. So I hope you catch both of those shows. They should be fun and interesting. Now, talking about interesting, let's look over at this market. Crude oil, people, is surging. Brent crude is over $80 a barrel. And WTI is $76 a barrel. So much for Jim Cramer's top. I told you it wasn't the top. And those of you got all giddy. Oh, look, Greg is wrong. It was the top. Duh. You guys are imbeciles, some of you. I tell you the truth. You just don't get it. No, it's not the top. And crude is going higher as well. Much higher, as a matter of fact here. Let's look at a couple of other things. Cryptocurrencies, as I said yesterday, I said I wouldn't be surprised to see them continue to fall under pressure. Well, they're under pressure right now. So is gold and silver, especially silver, down over 2.5%. The dollar today, people, stronger. Okay, the 10-year yield, 1.54, clearly out of the range that we have been watching for a long time. Now, with that said, the Mannarino Market Risk Indicator today, right now, is sitting at, I wrote this down, over 89. Okay, we are still in a low risk mode. However, we're getting close to moderate risk. Let me clarify something here for you real quick. Even if you're in low risk, it doesn't mean no risk. You understand? What we're trying to do is gauge risk. So understanding that the market involves risk. Okay, that's how you make money in the market, by taking on risk. We can gauge whether it's low or extreme, but that does not eliminate risk. You can't eliminate risk. You can move it around a little bit. You can hedge yourself in this market. And I hope all of you are doing that. This is why I've explained to all of you since time immemorial. You must keep yourself hedged in this market. Being in several different asset classes at the same time. So you don't have to worry about the moment when this market rolls over hardcore, because you're hedged. You understand? You must hedge yourself. And that means being in, like I said, different kinds of assets. But anyway, I think you will understand that. Let's talk a little bit further here. What did I write down? I already explained to you about the MMRI, for which, people, I'm going to place a link in the description of this video to my website. I'm going to place again, a link to the Mannarino Market Risk Indicator so you can watch it in real time. It'll be up probably tomorrow, but for today, we're sitting at 89. We're climbing. This number is getting higher. So keep your eyes on that. No doubt about it. I already covered gold and silver. We don't like to see this kind of action, people, but it is what it is. You know the game. It's going to continue to be played this way, but like I always tell you, we know what's going on. What are we doing? We're betting against the debt. We're becoming our own central banks. We will not stop doing this. The debt is a hyper bubble. We know who's rigging the market. We know everything. But again, let them play their game. We're going to play ours. With regard to cryptos, extremely volatile. You know that. I tell you this all the time. This space is not for everyone. Some of us, like myself, got in on a lot of the big ones much lower than they are right now, but that doesn't mean anything in my view. I think they're going much higher, much higher. The only cryptocurrency I am currently underwater on a little bit, and not even much because I bought the dip hardcore last time, is Dash. And I will continue to buy. I believe the space, and I believe Dash is going much higher, but you must accept the volatility. If you can't, get out. Find another way to invest. It's not for everyone. I tell you this all the time. Stock market right now. Let's talk about the stock market. Futures are lower pretty much across the board, pointing towards a lower open. Nothing dramatic, a lower open nonetheless. Okay, so what does it mean? Well, as long as the MMRI stays about where it is, okay, if we see this climb, we got to start thinking that things may be changing here. We're still in a low risk mode, but we're pushing the edge into moderate. You know how this scale works. Right now we are at 89, a little over 89. Up to 100 is low risk. From 100 to 200, moderate risk. Okay? Over 200, we start getting into a spooky zone. You got it? So let's keep our eye on this, and I know that's what you're doing here. And like I said, I will place a link on my website, traderschoice.net, so you don't have to calculate this. As a matter of fact, if you are a subscriber to my free newsletter, hint, link in the description of this video, I already sent out to you where you can track this in real time. So look, subscribe to my free newsletter, people. I don't know another way to tell you this. If you haven't done it already, there is a link in the description of this video. Like I always tell you, if you let me take care of you through the dog shit of this market and everything connected to it, I will do that. If you feel like going it alone, well, you need a little bit of luck, okay? Anyway, so with that said, let's recap. We got a stock market right now poised for a lower open. We got crude oil surging right now. 10-year yield higher, 1.53, stronger dollar. The MMRI sitting at 89, okay? It's still low, but maybe something to keep our eyes on a little closer here. I believe that the MMRI is going to become extremely relevant moving forward, because I told all of you, we're going to get a massive sell-off in the debt market at one time. And that is going to be reflected in the MMRI rising rapidly. I think it's a great gauge to measure risk by taking in, again, the debt market, 10-year yield, the dollar, through a little equation, a little math here. It's very simple, and we can come up with a number that we can keep an eye on. With regard to cryptos, people, you know what I'm going to tell you. Buy the dips. With regard to metals, same thing. Stock market as well, too. As long as the MMRI is staying, where it is. If we start to see this get above 100, okay, we're at 89 right now. We got to start maybe rethinking things a little bit. Now, I'm not saying we got to, go crazy and panic. Absolutely, we never panic. We never panic. You panic, you make bad choices. Not going to happen to you and me. Not going to happen at all. All right. With that said, people, I think I covered a lot of stuff here with you. I'm trying to think if I missed anything. Lots of important updates here. Please share this video. Get it out there. And, well, that's it. I will see all of you, well, maybe on Lynette Zhang's show. I think it's live. I could be wrong on that, but that's 11 a.m. Pacific Standard Time. Lynette is great. We'll get together, and all of us are going to have a rip-roaring good time. See you later.